please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome. You're watching CNBC TV18 and this is After the Bell. Let's take a look at the top stories that we are tracking for you this Monday evening. Dalal Street starts the week on a positive note. The Nifty closes above 9,900 after 5 trading sessions. Mid-caps outperformed, end 1% higher. Infosys stock stages a relief rally after brokerages wave a thumbs up to the return of Nandan Nilekani as chairman. Sources say former executives like Ashok Vemuri and BG Srinivas are in the contention to become next CEO. Debt-ridden SR Steel's lenders are keen to rope in a new investor and change the promoter. Sources say 6 players including GSW, Tata Steel and ArcelorMittal have informally expressed interest. That's an exclusive.
नई दुल्हन आती है, उसका तिलक करते हैं, स्वागत करते हैं, उसके बाद उसको कंप्लायंसेस बताए जाते हैं. फर्स्ट डे क्या 7 बजे सुबह उठना, 8 बजे आपके ससुर जी घूम के आ जाएं पार्क से तो उनको चाय पिला देना.
Minister of State for Finance Arjun Ram Meghwal equates GST with a new bahu. Says it takes time to comply with new rules, similar to how a new daughter-in-law takes time to adjust to a new household. Electric vehicle maker Tesla may not get any relief on import duties. Government sources say any tax breaks are unlikely as they want to move away from subsidies. That's another exclusive. The Doklam standoff finally ends after 2 months of tension. Both countries agree to withdraw troops. This just ahead of Prime Minister Modi's visit to China for the BRICS summit. Dera Sacha Sauda chief Gurmeet Ram Rahim, sentenced to 10 years in jail, will approach the High Court to challenge the CBI court order which found him guilty of rape. Sirsa, Rohtak and other nearby areas remain tense. Well, first up, let's get you the market action of the day. The bulls have started the week on a good note with all major indices ending in the green. So let's pull this up for you. Nifty closed above that 9,900 level after 5 trading sessions. In fact, that index ended with gains of almost 0.6%. Now, Sensex closed about 0.5% in the green. Mid-caps outperformed today. That index gained more than 1%, while Bank Nifty eked out about gains of roughly about 0.4%. Let's bring in Anand Singhal to take us through a quick highlight of today's trading action. Anuj, a good start to the week for sure.
Well, good day for the markets. Good start of the week after a long weekend. And the Indian market actually was among the best performing markets, especially the mid-cap side of the market. The mid-cap stocks really surged today, and leading them was the market-leading space, which is NBFC. So all in all, a really good day. The problem for the market has been Bank Nifty. That's been dragged by the biggest component, HDFC Bank. And today also, that was a bit of a problem for the Bank Nifty. In terms of stocks that led the market today, Infosys was your top gainer and top contributor as well to Nifty. IOC, NTPC, Sun Pharma, Yes Bank and ACC were some other prominent gainers. While on the losing side, you had stocks like Dr. Reddy's, excuse me, Tata Motors and Tata Steel. Some stocks of the day today included names like Adani Enterprises, which had an 8% move, Nestle after the analyst meet, CESC, and towards the end, Avenue Supermarts. What a move for that stock. Maybe a Bajaj Finance as well, hitting a market cap of 1 lakh crores. Other gainers today included L&T Finance Holdings, GSW Energy and Raymond. So all in all, what next? Well, this is the resistance zone for the market, the 20-day moving average. But global cues will be important. The sense you get is that if you don't see too much downward move in global markets, then maybe the Indian markets can continue with their outperformance. But that's a big if because for last 2 or 3 weeks, the driving factor has been the US market. So let's see if that market stabilizes.
Okay, well, bulls were as recharged as us. Let's see if that rally continues. But let's get you stock-specific action. Here's the latest development from Infosys with the return of Nandan Nilekani at the helm of IT major Infosys. The search for the next CEO has begun, and we learned that some former Infosys employees are among the contenders for the top post. Sources say that Ashok Vemuri, the CEO of the BPO business of Xerox, and BG Srinivas, the MD of PCCW Group, are among the contenders. A quick recap of Ashok Vemuri. Ashok Vemuri was heading the US business for Infosys, which was a sizable chunk and almost taking care of $3 billion worth of revenues. He was at the company for about 14 years till 2013, and BG Srinivas was at the company for almost 14 years till 2014. 2014. Both had exited right before Vishal Sikka was appointed. Now, amongst the company insiders who are in the fray, we understand that Mohit Joshi, the current president of the BFSI business, and Ravi Kumar, the deputy COO, as well as Praveen Rao, who is the interim CEO and MD, are being considered. Now, that's as far as the CEO selection is concerned. We also learned that 3 to 4 new additions to the board are likely very soon. In fact, CFO MD Ranganath, who has been in contention to eventually join the board, but it hasn't worked out, is also likely to be added to the board along with former employees and industry veterans. Let's listen to what Nandan Nilekani, who had said on the conference call on Friday that the search is open to insiders, outsiders and Infosys alumni. Here's what he had to say.
Yeah, we are going to look at internal and external candidates. Not only that, we are also going to look at what I would call as Infosys alumni, which is Infosys leaders who have reached very high levels and, have, for whatever reason, had left the company and have gone on to become successful elsewhere. We are very open. We have a very open mind. It's going to be a global search. We will look at internal leaders, external leaders, alumni, whatever geography, all that. We just want the best person, and I will spend a lot of my time in making sure that we have the right person in charge as a CEO.
That stock surged in trade today, jumping 4% in early trade. It was up by over 3% at market close. Let's just pull that up for you. This was largely at the back of Nandan Nilekani beginning his second innings at Infosys after turbulent time for the company, and Infy contributed 15 points to the Nifty's gain after brokerages gave a thumbs up to Nandan Nilekani coming on board. There you go, green across the board, and the stock ending up by about 3.1%. Here's the latest on the road ahead for debt-laden steel manufacturer SR Steel. Sources tell us that SR Steel's lenders will hold a meeting on the 31st of August. This will be the first meeting of the lenders since the time they took the company to NCLT. As we have been reporting, there are several contenders in the fray for SR Steel, and we now learn that lenders are keen that the firm is acquired by a new promoter. Ritu Singh has more on this exclusive news break. Ritu, we'll finally see the mega deal perhaps being closed. What is the list looking like in terms of contenders?
Well, several players have come forward and expressed an interest in acquiring SR Steel's, acquiring majority stake in the company, and this even as the promoters themselves are very keen to do whatever it takes to retain majority stake as far as SR Steel is concerned. What we do understand is that 31st August is the day that has been set for the first meeting of the committee of creditors that has since been formed, after SR Steel was brought under the IBC and subsequently admitted by the NCLT as one of the 12 accounts that were identified by the Reserve Bank of India. We're talking about a resolution of a 45,000 crore debt. There are several times in the past that banks have tried to sell stake in the company unsuccessfully. This time around, we understand they're very keen to change management. In fact, after the COC meeting, which is likely to be held this week, they will float bid documents and go for a public auction of the company, and the highest bidder along with the lowest haircut is what they would prefer. But they're very keen to change the current management at the same time. Of course, Prashant Roya on his part, told CNBC TV18 recently that they will use all the firepower from the Rosneft deal to ensure that they bid back and fight back to retain control over SR Steel. In the meantime, there are as many as 6 players that have informally expressed interests. Domestic players like JSW Steel, Tata Steel, international ones like SSG, POSCO, ArcelorMittal are just some of the names that are in the fray, but there is a lot of interest that is being generated as far as SR Steel is concerned.
Okay, Ritu, thanks for that. In fact, as Ritu was pointing out, Prashant Roya had said after closing the deal with Rosneft that they now have more ability to bid back for SR Steel. Here's exactly what he said.
We are confident of providing a resolution plan, which is
okay.
I can't say the best, but hopefully will be amongst the best.
Do you have bidders backed up as and when the bidding starts? Are there bidders that you have been able to shortlist that have supported you right now?
No, we are going to put in a proposal as SR, not as
SR?
not as bidders. Yeah.
Okay.
No.
So you are going to participate as and
I
when
also mentioned that the transaction which we have just done also provides us the firepower to do it and to invest. And one of the investments will be if required is SR Steel. So that's part of the process of having a stronger balance sheet and the ability to reinvest in our businesses.
Continuing with bad debt, and this one's again a CNBC TV18 exclusive. After identifying 12 defaulters for insolvency in June, the Reserve Bank of India is all set to release the next list of defaulters for insolvency proceedings. Government officials tell us that this list is likely to cover 15 to 20 cases. Both the government and the RBI are focused on resolving the stressed assets, so much so that they plan to give about 50 cases to NCLT by the end of December this year. But before we get you more of business stories, here's the big national stories. The Ministry of External Affairs today released a statement that read that both India and China have agreed to pull out troops from the Doklam Plateau in Bhutan. The news of disengagement of the militaries comes after more than 3 months and just ahead of Prime Minister Modi's visit to China for the BRICS summit. But according to Reuters, the Chinese Foreign Ministry has said that Chinese troops would continue to patrol the Doklam region. Zaka Jacob, who's been tracking all the developments, is here with the details. Zaka, what does this mean for the relations between the two countries?
So the 70-day-old standoff between Indian and Chinese troops at Doklam has finally come to an end. Both sides have agreed to disengage their troops from the face-off point in Doklam. This, of course, the broad contours of it are that the Prime Minister is supposed to go to Xiamen in South China for the upcoming BRICS summit later this week. Multiple conversations have happened between officials of both countries. Back channel has been active both at the NSA level as well as at the Foreign Secretary level. And in one of the conversations that happened 10 days ago, the Indian side conveyed to the Chinese that if the Doklam situation is not resolved by the first week of September, when the Prime Minister was scheduled to go for BRICS, the Prime Minister would also actively consider not going, and that, of course, would have been a major embarrassment for China and for Xi Jinping in particular, because he's the host for this year's BRICS summit. It would have been mighty embarrassing. The summit would not have gotten underway because the BRICS charter says that all 5 heads of government have to agree to take part. Only then can a summit be held. It would have been mighty embarrassing for Xi Jinping. Also, he's got this very important party congress of the Communist Party coming up in October. So to avoid this embarrassment, I think the Chinese have agreed to disengage troops. There's been some confusion in the wordings. The MEA statement that was put out first used the word disengage, which would mean that both sides have agreed to withdraw, whereas the Chinese Foreign Ministry statement, which was put up about an hour or so later, simply said that the Indian troops were withdrawing from the position that they were occupying. But I think both of these respective statements are largely for domestic consumption. The spin that's being given is for their respective domestic audiences. The moot point is that this standoff, which had gone well past 2 months, has now finally been resolved.
Okay, Zaka, thanks for joining in with that. We'll be tracking the story very closely all day long. Let's take a short break. Up next, the Minister of State for Finance, Arjun Ram Meghwal, has equated GST with a new bahu. Details when we come back. Minister of State for Finance, Arjun Ram Meghwal, today drew a bizarre analogy between the goods and services tax regime and a daughter-in-law. Addressing the 14th National Convention of National Real Estate Development Council, the minister said that it will take time to adjust to the new rules in the GST regime, just like how a new daughter-in-law will take time to follow what he called are new compliances at a new household. Here's what he said.
कंप्लायंसेस होते हैं साहब, मैं आपको बताता हूं। मैं तो एकदम ग्रामीण परिवेश से आता हूं। नई दुल्हन आती है, उसका तिलक करते हैं, स्वागत करते हैं, उसके बाद उसको कंप्लायंसेस बताए जाते हैं। फर्स्ट डे क्या 7 बजे सुबह उठना, 8 बजे आपके ससुर जी घूम के आ जाएं पार्क से तो उनको चाय पिला देना, 9-10 बजे कोई मेहमान दिख जाए तो गुस्सा मत करना, हंस करके उनको नमस्कार करना और खाना बना के खिला देना। ये नहीं है क्या कंप्लायंस का है? यस और नो तो बोलिए। अब उसमें क्या, अब ये ऐसे जीएसटी के कंप्लायंसेस है, रिटर्न है, आपको ये करना है, आपको वहां जीएसटीआर में जाना है, कोई दिक्कत आएगी तो वो ये प्रावधान है, ये सब कंप्लायंसेस हैं।
Okay, let's move on to the telecom sector. Bharti Airtel has entered the domain of cybersecurity. The company has inked a deal with cybersecurity firm Symantec to provide security solutions to customers. The telecom giant will offer security from online threats to medium and large companies as well as government organizations. According to the deal, Airtel will be the exclusive cybersecurity services partner for Symantec in India and will distribute Symantec's enterprise security software.
Where you have a cashless economy and things happening, that's a very attractive place for cyber criminals. So what does that mean? I think it means that there needs to be real penalties, real legislation. That's always a good thing. Second thing is endpoint defense really matters, and the mobile platforms platforms that we know of as Android and Apple's iOS are really the cornerstone of this mobile, smartphone kind of wave that we're on, and they need to be protected. And so we are at Symantec and with our partners at like Airtel making big investments in protecting these things.
Now, Vodafone's global CEO Vittorio Colau has written a letter to Telecom Minister Manoj Sinha asking for an interest rate reduction for spectrum payments. He has also asked the government not to reduce mobile termination charges. The letter says, and I quote now, "We are seriously alarmed to see reports that the regulator is considering a reduction in MTC at a time when the industry is facing such immense hardships. Any move to further reduce MTC's risks, destroying the very companies that have invested to build this industry. The existing rate of 14 paise is already below cost. Reliance Jio has been seeking a cut in the mobile termination rates." Colau goes on to write, and I quote again, "RGO is also assuming that it can cover its costs many years into the future. It is undesirable for a critical core industry like telecom to be regulated based on the ambition of a new operator with no history of financial sustenance," end quote. That war of words continuing. Some decision is likely in the days to come. The big story from the insurance sector. Sources tell CNBC TV18 that insurance regulator IRDA's board is set to meet today. In fact, it has already met today. The regulator is expected to have taken up IPO proposals filed by 5 companies. Yash Jain is here with the details. Yash, some critical names on that list. Are we expecting of the final nod to come in today after the board meeting?
Well, yes, the insurance regulatory body IRDA's board meeting is currently underway as we speak. Most points on the agenda of this board meeting are more procedural in nature, but there would be 2 points which would be very crucial, and we will have our eyes on as to what decision is taken on these 2 points. I'm given to understand from my sources that IRDA's board will take up Reliance Capital's proposal of carving out a separate health insurance arm, a standalone health insurance arm. Now, this, of course, the papers were filed with the insurance regulator a few weeks ago, and now, of course, that will be taken up for the first out of the 3 approvals. Of course, there would be 2 more approvals which the company would need before it starts its operation. Now, currently, of course, Reliance General, which is a subsidiary of Reliance Capital, as well as the standalone health insurance arm, both would coexist once it's established. And, of course, the differentiation would be in terms of the kind of products which both companies offer in terms of focus areas. Also, this would be the first time an IRDA board meets after a series of IPO proposals have been filed with the insurance regulator. We are given to understand that IRDA will be considering and discussing these individual companies' IPO proposals to understand if there is any further requirement, if there is any other disclosure which is needed from these companies before a final approval is given to these companies for their listing plans. So yes, these 2 important things. The meeting is currently underway. We'll keep you updated as and when it finishes, and there is any update on these 2 proposals or any other issue which is taken up in this board meeting.
Okay, Yash, thanks for joining in with that. We'll take a short break on that note. Up ahead, the other national story of the day, the Dera Sacha Sauda chief Gurmeet Ram Rahim has been sentenced to 10 years in jail. More details. The government is unlikely to agree to Tesla's request for an exemption on import duty on its high-end electric cars. Remember, earlier this year, Tesla CEO Elon Musk had tweeted that his company was in discussion with the Indian government seeking relief on import duty. Still, a local factory is built there. Ron Banerjee, who's been tracking the story very closely, is here with the details. Ron, why did the government turn down Tesla's request, and will Tesla change its mind for India plans?
Well, we are still awaiting a comment, Kritika, from what this could mean for Tesla. But officially, the government is still looking at that proposal. But what we understand from several people within the government is that they are unlikely to go ahead and agree to the Tesla plea of a cut in import duty till the time they set up a manufacturing plant in India. To begin with, one of the rationales that they gave us was that firstly, it would, set a wrong example because there are so many global OEMs wanting to enter India, and India stridently has stuck to the 110, 115% overall import duty that completely built units have to pay when they are entering the India market. But the other and more sort of key reason why the government is likely to turn down Tesla's request is because they feel that giving into Tesla's request would be inimical to the government's entire electric vehicle mission. Because if you see what the government is trying to do as far as electrifying mobility in the country, they are moving away from the global model, which has been on giving, tax breaks and subsidies. And the government is looking at volumes and sort of, trying to build a business case for it. And that is one of the reasons why the government is likely to turn this down. And so we'll, of course, have to wait and watch, Kritika, if this at all has an impact on Tesla's move to enter India or not.
Okay, Ron, thank you so much for joining in with those exclusive details. Here's the other big national story of the day. Data Sacha Sauda's chief, Gurmeet Ram Rahim Singh, was sentenced to 10 years of imprisonment today. This comes days after CBI court in Panchkula convicted Singh in a 2002 rape case. The prosecution has been demanding maximum punishment for Ram Rahim. However, he was not given a life term. The sentencing was followed by more courtroom drama. Ram Rahim had broken down in the court, refusing to leave the room. Take note here that this is the verdict just for the rape case. Rahim faces charges for murder as well, whose quantum of sentence, if he is convicted for it, may add on to this current existing sentence. Well, with that, we're completely out of time on this edition of After the Bell. Many thanks for watching the show. Stay tuned to CNBC TV18.